Get ready to go ahead and do what we do best, put the work in and make sure we stay on the right side across markets. I'm taking a look here at Bitcoin today. We're going to be taking a check in and see what's going on. A lot of people are beginning to talk about this, and it's great. The more people that talk about it, the better. People are now noticing that, as obviously, guys, do you see the manufacturing PMI today? Up over 52 again. Where are we in cycle? A lot of people looking for that recession. Oil is at an incredible rate, over $100 a barrel. We're just under 100 right now, ticking up as Trump said he's not happy with Iran's deal. Looks like the blockade is going to continue. Is there going to be any type of resolution to that? Sure enough, as per our assessment, as we came into Friday, you saw that Iran made a proposal. Now, obviously, that proposal is not anything that Trump or the U.S. administration is looking for. No concessions were made. Is it just to buy time? We don't know. Hot weekend ahead of us. Again, if this thing escalates, we could wake up on the open on Monday, Sunday night, Asia Open, and see oil above 120 very easily. Trump keeps saying that oil is going to drop like a rock. Well, only if the situation is resolved and flows start flowing once again. But we are seeing signs that the economy, specifically the U.S. economy, remains really, really resilient. That could be much different 30, 60 days from now, especially by September, if we're not seeing oil flowing through the Strait of Hormuz. It could set up an actual global event that will be very ugly, and just making sure that you're able to be on the right side will mean everything. A lot of people talking now about how, obviously they've seen before that it seems that really big bull runs on gold wind up leading to then Bitcoin bull runs. I think it's important just to check in 1 second, and we're going to take a look at this chart, and then I'm going to come back over here so we could talk about where we are in the cycle. I love this chart that Don Scholl has shared. I'll break it down for you in one moment. We get to check in what's going on over here as we got the new update on monetary base total, and it continues to kick up, right? Remember this, we've pointed out the Fed cycle, and the Fed cycle is a lot different than most people realize. Look what this is: Bitcoin under massive pressure as monetary base total runs out hard. Now that it's ticking up, Bitcoin is trying to find its bottom. Fed's balance sheet continues to run up over here ever since they started their $40 billion a month reserve management purchases, they call it. Now, this reminds us of where we were in 2019. We'll get back to that in 1 second. Let's start over here with gold and talk about what's going on, as a lot of people are now talking about this. And I've just related to it. So if you remember when we were in the pocket and we were retesting the low, and we were looking at roughly 1 Bitcoin buying 13 ounces of gold. So, well, there's a good chance that this is the bottom. Not that we can't even go lower, not that we wouldn't retest even lower, take out that low or anything like that. And we're just into the resistance of what we need for a breakout, a confirmation. And if you look at past cycles, it's very easy, because we've noted it before, that we saw in gold put in a high, is inverse. Bitcoin put in a low versus gold, come in and retest it. And that then was the beginning of the flow of Bitcoin outperforming gold. You saw it in both bear markets, Bitcoin versus gold. And now it's happened again. And it's extremely elongated. Notice in the past where I have this horizontal, and if you go off of the high, right, once it breaks out, you see Bitcoin run up. Again, this is the horizontal, would be lower over here, because that's where you retested in the middle. This time is different. The retest in the middle is at the exact high. So that's different than we've seen in the past bear markets of Bitcoin versus gold, except that also this one is extremely elongated, which could also signal that when we do get the breakout, this is just the next confirmation, and then we got to work our way up. Are we going to see something like a sharp move up? Probably not. Don't forget, at this particular juncture, when Bitcoin broke out versus gold, the printer was running. They were outright QE. That's not happening right now or anything close to it. We're over here right now in cycle. Yeah, this is the lockdowns that occurred, but we're over here. We're not here into outright QE. Is there a good chance that if we're able to claim this breakout and continue to see this trend that is developing continue, that we could see more of, a slower, longer march up to the top over here? That's probably more probable. I look forward to the day that we're here together. And remember over here, guys, we were all here together. Bitcoin versus the US dollar in July 2020. And we had the breakout, the retest, the blue box, hold your breath. And we were there together to experience that. I can't wait till we're here to experience the breakout of Bitcoin versus gold. It's going to be absolutely beautiful. Let's go ahead and just view what's going on here with Bitcoin right now and where we are. And I'm just going to pull up a lot today, late 2019. It's because where we were in Fed cycle, which puts us right around over here where I'm making that green dot. If you go from the high and then to the low, that was roughly a 65% pullback. Now, whether the low for Bitcoin US dollar is in, well, that's, we don't know. 52% pullback this time. So we are seeing that reduced volatility, and we are seeing, or I guess we'll be able to later say together, oh, now I realize that we were seeing exponential growth at this point of cycle. Right now, of course, people are looking at the near term, and there's 55% off the highs. That's a substantial dive, and a lot of people are looking at the bear channel that developed, wound up breaking down, and a lot of people seeing the potential for the similar, and that could happen. That could happen. We're getting close to a potential breakout, right? You can see that we've had the breakout, the retest, and now we're going for the resumption. And it's very clear if we were to break above the whole number, 80,000, that opens up the door for this move to carry. That would invalidate the bear flag, bear channel that had been developing. And we would see a lot of interest turning towards Bitcoin. I've been following this chart. It's just inverted. Same exact thing we've been looking at inverted. And we saw the breakdown, right? The retest. And now we're looking for that resumption. And if we were to break down below that whole number, 80,000, you could see that there is a strong chance that it would actually be a strong move down towards that $87,000 area. And that would do a lot for sentiment, unquestionably, no doubt about it. Again, a lot of people talking about Bitcoin versus gold now as it is coming into a downtrend, as it's getting ready potentially here to spring out of it. It would be very, very bullish for gold if it were to do that. This chart over here reminded me of a chart that we were viewing a lot together, and that one was this over here. And this is on the weekly time frame. And I thought personally, I personally was wrong. I personally thought that this is the bear market low of 2022. This was again the FTX event, and then that was the bottom. And I thought that we would not test below there. Outside, I didn't even think we would test down there, to be honest. Not to be honest, always honest. If outside of a liquidity event. And a liquidity event is something more that I believed was something like the global lockdowns over here. And okay, well, we did have a liquidity event in so much as that the lack of liquidity, the ample reserves no longer being ample, causing the Fed to have to stop QT and then to begin once again easing as far as raising the balance sheet, not to be confused with outright QE. But it wasn't the liquidity event that I thought we were going to experience. And it's what's weird too. You could see that this was the low of the global lockdowns. It was taken out over there. And now that low was taken out this time. So that's a bit of a trend on the downside. That's lower. Now, this is from structure. Obviously, this is a higher low and this is a higher low. But from the structural standpoint, those that are students understand what that means. that this was actually, we're seeing lower lows structurally being put in. I'll give you another one of those, and you can see these green dots. This was the yen, Japanese yen unwind, carry trade unwind that occurred. No, it's not, Jordan. This is the Japanese yen carry trade unwind. This over here is the launch of the spot ETFs, and then the fake out that caused a lot of people to believe that was a sell the news type of event. This is the fake out of the launch of the spot ETFs. This is the Japanese yen unwind, and it was a major breakdown over here. Why? Because that was structurally making a new lower low that had held for a couple of years. And then it's going to be a long time till we repair that damage, by the way. We have to get above this line that I'm highlighting to go ahead and repair that. That's well above 110,000 right now. Hey, listen, we'll see what happens. Let's continue over here and look at what's going on. And this chart I said from Don Shaw, I love it. It's fantastic. And you can see that what it's pointing out is looking at Bitcoin on a weekly, on a closing basis. And then you can see the faded chart behind us. Here's the global lockdowns. And it's comparing to where we are in cycle, exactly to where we were as we look at what's happening as far as, again, the last time the Fed began raising their balance sheet. Last time we saw Bitcoin slightly tick up, make a lower low, and then make a lower low once again. This is where we are right now. We ticked up, we made the lower low. We have not made a second lower low. We have not made it. And we said this whole time, like maybe we obviously don't know what's going to happen in the future ahead of time. We only know where we are to get our situational awareness and be able to navigate around that. But we are seeing the potential here, and this could all change drastically this weekend. Again, if you wake up on the opening on Monday and for whatever reason the situation escalated massively in Iran, bombs flying, or you could see easily oil above 120, and you could see a massive breakdown then ensue. One thing that I have to point out is that we were watching the weekly, and we tested down earlier in the week, and we're closing pretty strong thus far. We're waiting to see if at any point in time there's a massive reversal, but we didn't just now make a new all-time high. We continue to put a lot of space between that all-time high. We got past the earnings, the Mag 7 earnings, major hurdle, and guess what? The AI build out continues. It continues. We are now, by the way, just for a little awareness over here, I'm looking at that floor over here, that resistance. I mean, that support that then became resistance. And to the top of this channel is another, let's say 7-8% away to the top of that. That brings us close to NASDAQ 30,000. But again, I think what a lot of people are missing right now is that liquidity is expanding in the system. And yes, there are things that could change that. One thing that could change that, the red flags we're watching. You see the 10-year break above here and shoot up. That's something that could definitely put a hard stop to the liquidity that right now is flowing. Again, that would be caused likely by oil breaking out above 120, holding and or escalating. Those things are not happening right now. Yes, I look forward to seeing what is the resolution of X's and Trump's meeting. I wonder, is there going to be some type of grand bargain, or are we actually looking at, the AI war being fought? A lot of people argue that actually what the US wants right now is higher energy prices because it puts more pressure on China. China has a massive stockpile of everything, more than anyone else in the world. But you know what? It's being exhausted, and it obviously could come to a point where it's putting more pressure on China. We're seeing a lot of the flows rerouted over towards Texas. We're seeing the massive pressure leverage that the US now has over Europe as they're supplying their energy. There is a battle being fought, and don't get comfortable at all to what is going to happening. A lot of people have been watching this move from the sidelines, not able to believe it and believing that we're about to hit soon a correction. That comes off of the belief, and it could be correct. If you go ahead and you just look over here, and again, Major Don is pointing out that we are right now exactly where we were last point in cycle. You have obviously the global lockdowns. If the I always call that an anomaly, and it was an anomaly, but it doesn't mean another anomaly couldn't happen. Is right now 20% of the world's energy supply being cut off an anomaly? Well, yeah, it is, but it's going to take one of greater degree to cause an event like when the world came to a standstill. If it didn't happen, it did happen, but if it didn't happen, the global lockdowns, I always said that Bitcoin likely in early 2020 had made its low and was going to slowly continue ticking up like that. And you could see that if you take out the anomaly, that is currently where we are. And that's probably where we are right now. And again, if we get a break out, which would be a breakdown here, we could see a quick move into 87,000, but that move would probably then see a pretty strong pullback, consolidation, and just a more of not like a sharp move up, more of a slower build and repair. At least that's what I envision. And this is all very fluid. A lot could change very quickly. I want to just come over here and take a look at this with you. This is interesting. I mean, I'm looking at the green line over there, the smooth floor, because I'm looking at where I got it wrong. And I'm looking at this chart over here and I'm saying, well, I didn't expect that we were going to make that lower low. I have to now be, just adjust for the future. Wonder why you haven't hit the like button yet as we continue taking a look at the markets together. I mean, I'm looking at the previous cycle ceiling, and so far, that's a nice hold. If we are able to continue this move up, to continue that breakout retest resumption that's underway, this will be looked back as what was the mid-cycle low. Mid-cycle low. And then obviously a lot of people's view of 2026 bear market, the idea will all be thrown out the window, and then we'll get some new opinions and thoughts, and it'll be fun to go ahead and look at them together. Or yes, is the bear market case still in effect? Absolutely. There's no question about it. We are now testing some important levels. It doesn't mean that we're going to break out, right? We have the breakout, the retest underway. If we do not break out and we're just into resistance again, remember this area? Sound familiar? It looked like we were going to break out and we didn't. We were rejected. And then the leg down came hard and fast. Absolutely still in play. Do not get comfortable at all. Do not get comfortable. There's nothing to, and I think that's something that a lot of people have learned, and they're not comfortable. And that's I think, and correct me if I'm wrong, but I think the only people that are likely comfortable are those with the bear market bottom in October, November. We're trading down another 40%. Like they seem pretty comfortable in that. I don't know what happens. And that is where my comfort is found. I don't know what happens next. I'm navigating and I'm staying on the right side. That's where I find the comfort in what's going on. We have a couple of pending on stocks over here. Tesla, so far for Monday morning, pending long, along with, look at that signal over there, the Bitcoin spot ETF. I have to take a look at what's going on over here with Bitcoin bull markets. Let's go ahead and jump on. Bitcoin bull markets after this, the last stop loss is not yet triggering. JV filter keeping it out of the market. Don't get confused. Look at that exit. That exit surprised a lot of people and on the sidelines for a long time. Don't get confused. The win ratio is extremely small, less than 20%. But the risk to reward is massive. The average winning trade over here is roughly 327% compared to 2%. It's about roughly 150 to 1 risk to reward. And this is where we are. Talk about preserving purchasing power. Talk about patience. Talk about preserving purchasing power. Beautiful. I bring it up only because we're close, very close to seeing the spot ETFs on Bitcoin once again entering the market. That has been a long time. Talk about having a simple strategy. Wow. This is on GBTC. However, whether it's IBIT or any other of the spot ETFs, they all trade the same. Jumping back over and continuing this conversation because I wanted to look at midterm elections. This sets up the chart I want to look at with you. And a lot of people look at the midterm years. They look at how we see coming into the midterms, usually a correction on average of 10%, and wondering if that's about to come. Look at the red line. No, not the red line. We'll look at that after. Look at the blue line, all midterm election years. And you could see that it's normally around this period between May, sell in May, go away, and in through October that drawdown occurs. So you have to, is that what we are setting up for right now? A lot of people are very aware of the pattern. A lot of people are watching that, and it's completely in play and more. Guys, it's so hard to have an opinion right now of the macro because there are so many volatile components to it. Now, the best, I think, macro thesis right now is liquidity is turning up. And then a lot of people say, well, the last time that happened, Jordan, in 2019, you weren't seeing oil trading at over $100 a barrel. I say, absolutely, you're exactly correct. You also weren't seeing the U.S. Treasury running new issuances at the pace they are. And you also weren't seeing them buying back long-term debt. You weren't seeing either of those things happen as well. And look, currently, and where we are right now, liquidity is moving up. That could change. We've pointed out things that could cause it. We're watching them. It hasn't happened yet. Extremely hard to navigate these markets, no doubt about it, and it will continue to be as well. So that's the path of all midterm elections. I think what's noting is the sixth year of a presidency, although it's very hard for me to look at that data point because, yeah, this is the sixth year of terms of Trump's presidency, but it's not consecutive years. So I don't know what that means. And I don't know how many other data points there are to look at of a 6-year presidency with a 4-year break in between. And you could see that as you come towards August, that is in August through October. I think one thing we could say, October seems to be a place that is very favorable regardless of the seasonal pattern you're looking at. I think another thing that we could look at and say together, I'm going to bring up the seasonalities and look over here in October. And again, that lines up. And then, well, Jordan, this is lined up pretty well looking at that seasonality. And you could see the drawdown in March and then the recovery in April and so on. And that matches pretty close with Trump's presidency years. So is it anything about Trump and his presidency years, or is it more about seasonalities right now? I lean towards the latter, that it's actually is nothing to do with Trump's presidency. It has a lot to do with seasonalities. And you could see the drawdown through March and then the recovery through April throughout the rest of the year. Is that the likely path that we are entering? Could be. I think so. Again, October is when we've seen a lot of the safest seasonalities occur. So we'll be watching that as well together. So a lot of people are bringing up, we're about to hit into a massive drawdown, and it could be, that could happen. Again, we were watching specifically as we made those new for a liquidity grab. That hasn't happened. We've been able to extend those gains up. Looks pretty good. When I look at the S&P 500, just two things I want to bring to your attention. Number one, and let me go ahead and share that. Season out. Oh, let me get this post up by my friend Crypto Burb up into the nest over here. really quick if you want to look at that, what I'm looking at right now. Ace is talking about seasonalities, and I'm doing a lot of looking into a lot of research into looking at coils. We were talking about CTM developing a universal setting for low caps that meet certain criteria of growth, looking for that massive outperformance. And another thing that I'm focusing in on in my spare time, you're right, is looking at what type of consolidation coils lead to big moves. If we're able to narrow down certain criteria and then move our mechanical edges toward them, I think that is a lot of good hunting that we could look into and do. Just some things from afar that I'm working on. So look, I'm going to go ahead and just going to move this line up, and then I'll put it back, and then I'll keep it. No, but I'm going to clone it then. I'll move it up. And you could see that where we just retested back during that max fear situation where we loaded up on the max 7, you could see that we came into what was a very nice structurally higher low. It's a higher low, and it's also structurally a higher low than the last one. That's pretty bullish. Now I'm zooming in over here, and this is coming back to the 2022 bear market. And then you could see that structure is where we peaked over here in December of 2024, not tagging it in the October 2025 high, just below it. Kind of reminds me of the weakness we saw on Bitcoin over here, where we didn't touch the line. We left a little space, and that led to the big move down. You could see over here in October, we didn't touch the space, and that led to what was ultimately a bigger move down. And you know, there's some space over here before we get to a pivotal point. Another 4% on the S&P 500. I don't know if you're going to call it 76,000, 77,000. And then I also wonder if it go like this, and we should be worried about that area right there, right? That's the areas of first. So I mean, yeah, a lot for sure. We're towards an area over here where we've seen a massive spring up. It's not an area to begin positioning into. We are, by the way, looking to position into Tesla and spot ETFs. Nice carries over here in NVIDIA and MicroStrategy, holding some beautiful trades. The V4 templates for the stocks that will be released very soon, we're showing that this was a wave to behold. TQQQ, I'll just read it for you because you can't see it. I could see it though. 28%. Unbelievable. I can't even see what's going on over here because I got too many things going on. Tesla just entering a trade. Of note, FNGD up now 20%. That's FNGU long. MicroStrategy keeping pace with our own 24%. And SOXL is not modelable from my opinion. You know, 175% open position. No, I can't get something to work over there. But bulls is a beautiful thing to be looking to add over here. All right, everyone, coming into the weekend. Thanks for being here. Thanks for being here. I enjoyed these sessions with you so much. That's beautiful. And big, massive, just thank you for getting bulls into our lineup so that we have what is, again, that CAGR over the last few years, something to behold. Everyone, big hug. Have a great weekend. God bless you. Did NVIDIA exit V4? I'm not trading these. These were built and then forward tested. That's all it is. Some errors over here. I don't know what that is. 3.6 I got to get up to. No problem. I'll fix that up later. I have not been given time to this, which is why you don't have it yet. And let's do this. Didn't exit yet. That's right. Everyone, lots of love. God bless you. Have a great weekend, everyone. I'll see you on Monday.